bought my first duplex with an FHA loan at 3.5% down. And the market was growing like 3-4% a year. So I was already making my money back every single year just in appreciation. Like, for example, the guy who makes all the bingo chips in America, he has like the small little flex space building and he pulls in millions of dollars every month. And he just rents out this small little space. I guarantee you they're gonna love working in an AC building way more than one without AC. So if you put AC in the warehouse, I'm seeing that you can maybe get like $1, $2, sometimes $3 a foot more in rents because nobody else is doing it.
Yeah, we hear there's riches in the niches all the time, but I don't think people actually adhere to it.
Yeah, I don't think they know what that means. Like they say it, but they don't know what it actually means. And this is what it means. Pick something and niche it down even more and just stick to that.
Alec McElhhiny has joined me here today. You got a great domain here, land-play.com. We're going to be talking about flex storage and flex buildings here today. So really appreciate your time here today, Alec.
Thank you so much for having me on.
So can you share a little bit? Let's start things off. How did you find your way into this?
Yeah, I was a math major in college and I was studying to be an actuary. And I was an actuary for a little bit out of college. I was working a bartending teaching job in college and I was trying to figure out what my net worth will be saving my actuarial income. So I'm like, all right, if I say 30K, 40K a year for X amount of years in the stock market, 8% interest rate, what would my net worth be? And I could not find a reasonable amount of money that made sense in the time that I could retire that made sense. Every time I plugged that number in my calculator, like mess with the numbers a little bit, I would always end up like retiring at 50 or 60 with like a nest egg of maybe, 4-5 million. And I'm like, there's got to be a better way out there than just saving and putting in the stock market. I found messing with the equations a little bit that the quickest way to change that is changing how quickly your money grows. So if you invest in the stock market, you're gonna get a 7-8% interest over time. If you put that in real estate, you can drastically increase that number. And I found the quickest way for me initially was like, let's put in house hacks. So I bought my first duplex with an FHA loan at 3.5% down. And the market was growing like 3-4% a year. So I was already making my money back every single year just in appreciation. And then there was loan pay down and cash flow on top of that too. I figured out pretty quickly that real estate was the way to go about it. The second part of that equation was how much money can you like invest a year? I met some guys flipping warehouses, which is like a whole nother ballgame than real estate. Like in real estate, if you flip a house, you might make like 30-40K on a good flip. In commercial real estate, that could be 300-400K, sometimes in the millions on a good flip. So it was just you just adding another zero to that profit. I bought my first value add commercial building, and then the market started changing. I was looking for more buildings. The interest rates were going up and cap rates were compressing. So I switched to ground up development. I met a guy building what's called flex space, which is like small bay warehouses. The margins on those were so good that it didn't matter how much the market changed. You can still do well even if you're building in a recession or if interest rates were going up. So that's what got me into developing.
Tell us about what you're working on now, then, land play and its mission.
Yeah, so I find land, it's a vertically integrated development company. Vertical integration just means that I have a company and I have control over multiple steps in my company to make sure I have control over my profits. I find the land, I source the land, I build the buildings myself, GC it myself, and then I'll source materials myself. So there's just like a lot of ways that I can save a lot of costs and build at a good price better than other developers in town and make sure that I'm okay like in a recessionary period or if interest rates change. So it's less scalable than your traditional company. But if you do like 2 or 3 projects really well every year and they're really safe, but that's what I like. I like just hitting singles and doubles, honestly.
I was going to ask you, flex space is one of the hotness when it comes to real estate investing at the moment. Could you kind of break down why that might be the case?
Yeah, it's really cheap to lease it out and it's cheap to lease out because it's cheap to build. And a lot of people like they have a warehouse and then they have their office in a separate location and that's kind of expensive and they have to drive back and forth. And why not have it in one spot? And that's what flex space is. It has a little bit of office in the front, a little bit of warehouse in the back, and you can change the proportion that whatever tenant you are, you can change that proportion. And you can build it in a lot of areas. Like a big industrial warehouse, it's kind of hard to build that in like a retail area. And you can build flex space in a retail area and you can dress up flex space to make it look a little nicer and make it more presentable for somebody who wants like a nice presentable spot, but also a little bit cheaper than like a retail building.
Well, I would imagine you're dealing with a different kind of tenant too, because usually when I hear flex space, it's usually established, kind of secure, steady Eddie type of businesses that are looking for stuff like this, plumbers and electricians and HVAC people.
No, yeah, you're absolutely right. They're very steady companies, and I just love blue collar companies because they make so much money and they don't need a lot of space, and they're just really reliable tenants. Like for example, the guy who makes all the bingo chips in America, he has like the small little flex space building, and he pulls in millions of dollars every month, and he just rents out this small little space, and that's the type of companies that you want. Those granite tenants bring in quite a bit of money. You know, plumbers, it's no secret that plumbers make really good money. So yeah,
Mm.
these blue collar companies just do really, really well. So and those are the type of tenants that you want.
Is there any particular part of the country you're focused on?
I'm focused more on I really like Austin, San Antonio corridor, so that I-35 corridor, and that's I really like it for a couple of reasons. One of the biggest reasons is that there's like 1.5 million people moving there in the next 10 years. Texas is a really business friendly state. It's very quick to build in that area. And then you have surrounding markets that are just growing a lot. Dallas is growing a lot. Houston's growing a lot. And all up the I-35 corridor is growing quite a lot. So you'll need a lot of those support flex buildings to support the bigger warehouses coming in and the bigger companies that are coming in. So,
Well, based on what you're saying so far, you seem to be a very calculated, math oriented individual when you make your decisions. Is population growth a major component of that, of where you might decide to move into next?
yeah, population growth is great if you understand what you're doing. For example, if you're flipping houses, you actually probably want to stay away from those population growing spots. That's probably more of a developer's market. Like in Austin, you'll have what's called the inner ring, and that's the part of the city. I think it's one of the highways that goes around Austin. The people who've owned houses in that inner ring, their houses have appreciated like 4 or 5x in the last 15 years, 20 years. But people who've owned on the outside of the ring, since there's so much competition with developers, they haven't seen a lot of appreciation, honestly. I really like markets that are growing because you can find land really cheap. And then by the time that the growth comes and you're done with your development, you're building pro formas. You basically just got really cheap land for a building that's going to perform the same as it would in a building a little bit closer to the market.
Austin is one of those places that the only reason it's on my radar is regarding the music festivals and everything that go on there.
Yeah, we got some music here, so it's pretty cool. Like San Antonio more actually. San Antonio, well, I like spending time in Austin more, but I like San Antonio more for growth, and I like Dallas more for growth. I feel like Austin was kind of overbuilt for a lot of asset classes like multifamily. I was just talking to Brandon Turner, I think a couple weeks ago. I ran into him at a rooftop bar or rooftop pool in Austin, and he said he bought a multifamily building for I want to say 75 million, and now it's worth 35 million in Austin. I'm like, how does that happen?
Yeah. Wow. That's a little backwards. But you probably have had a lot of run ins where there's a lot of stories to be shared.
Yep.
Have you had any projects yourself that have gone backwards like that?
Well, I would say my first duplex I bought, and this is really important for your listeners who want to get into real estate. The riskiest thing to get into is something that you don't know anything about. And my first deal, I bought a duplex. I didn't know anything about duplexes. I probably spent 40K, maybe 50K over market on it. And yeah, that's not great. Like if I had to sell it, I would have been out of pocket like 40, 50K. The amazing thing about real estate is the longer that you hold it, the more forgiving that the market is on you. And I bought like during COVID and there was a lot of appreciation and then loan pay down and all that. So, and I learned my lesson. Next time I invest in something, I need to really know it.
Yeah, I hear that time and time again, that if you, as long as you hold it long enough, even some of those, because we always say you make your money when you buy, but
Yeah.
sometimes even that can be rectified if you can hold it long enough.
Yep. And that was, oh yeah, and that was the last time I ever overpaid for anything. Like all my deals now, like it needs to be a great deal for me to even think about buying it. So
Well, would you mind sharing that? Like what makes a great deal?
yeah, if you get under market, that's really good. I'm building some flex buildings out in New Braunfels, and I got the land for about 1 million, maybe 1.5 million under market. So the second I got under contract, I could have just flipped it and made a lot of money. So that's the type of and kind of like what your business model is with wholetailing. Like just find the deal that like if you need to get out of it immediately, you're still profitable.
And in fact, it's kind of we've I told you before we hit recorded that we were doing like full fix and flips, and more times than not, we've found that we maintain the same profit whether we do the wholetailing route or the full fix and flip. It's a matter of how much pain do you want to go through in the process.
Yeah. Yep. Exactly.
Well, what has been your biggest lesson along the way when dealing with this asset class?
I've learned not to listen to what other people are doing and do the opposite in a way. Like if you're getting all your data from CBRE or the news, you're probably way too late or it's not the news that's helpful for you to build. You've probably seen headlines where it's like, don't buy real estate, but you have a system down where you can find good deals and you know how to find good deals in any market. You have to be a successful real estate operator. I know what metrics to look at. I know how to gauge brokers in town, gauge how products are leasing in the market to decide if this is a good product for here or if it's better to do it over here. And yeah, just not go off of what the news says. Like you have to really go off what the market says.
It's always one of those situations, right? I even see it in my market where there's a demand, everybody jumps on it, they start building, but by the time the facilities are done building, now the demand has stopped. It's always like you mentioned, 6 months, 9 months, maybe a year behind the cycle when it comes to any kind of demand versus product.
Yeah, and that's another way that you can de-risk yourself with flex space, like you said, that time aspect. So if you're building out in Austin, it can take 2 to 3 years to get site plan approved, which is crazy. So, and that what that means for your listeners, like if I find a piece of land and I want to build today, I actually have to wait 2 to 3 years before the government gives me the thumbs up, which is mind-boggling. So I like to go to counties where it's like 2 to 4 months, so that way I don't have to have that risk of other people be competing with me in the next like 2, 3 years. So yeah, that time component is very important for meeting supply and demand.
Going back to some of your early investing, it sounded like, or I may have read it somewhere, where you were able to break into this development without a lot of institutional capital. Can you talk a little
Yeah.
bit about how that was done? And that would be really helpful for people.
Yeah, if you have friends and family is great. I've never really had family invest in my projects. It's all through relationships. So building relationships in town with people with capital, that's a great way to do it. And I think the best way to like overcome that mindset is like meet people who are raising capital. And once you talk to them, you'll realize, oh, they're not really that smart. They're not that special. They're just doing it. And once you realize that, like, it really opens the door for you. Like, I can do what that guy's doing, or I can at least do half of what he's doing. So, um,
You have-
oh, also like being creative. Like, and it sounds like Jack that you're extremely creative with real estate, with wholetailing. If you can get creative with real estate, there's a lot of deals that you can get into that a lot of people like can't get into.
Well, when you're dealing with commercial spaces such as flex, anytime that I've done that, even with some of the multifamily, that is typically where the seller is actually a little bit more open to and used to these creative methods. Is that the experience you've seen?
I'm sorry, we broke up a little bit. Could you say that one more time?
I was just saying that when it comes to commercial places, when it comes to commercial real estate or multifamily, that's actually where the sellers are a little more used to a creative approach. They might be willing to carry back
Yeah.
because in the end, in many cases, some of these people, that's how they purchase the property.
Yeah, they have that background because to be successful in real estate, you have to be creative, and they probably have more experience doing that. Also, with commercial real estate, depreciation starts becoming a very valuable thing. There's a lot of things you can do with depreciation to sweeten the deal. You can also do seller carries. You can get creative with, tax incentives. So there's just like so many ways to just really help solve the seller's problem and make sure that they get a good deal out of it too. So everybody can win.
So just to remind everybody, we're talking to Alec with land-play.com. I'm going to have everybody head over to there, but you can also find Alec pretty easily if you head over to LinkedIn, and I'm going to have that as a clickable link in the show notes as well. But before we jump into some trends and market and where Alex sees the market going, I just want to ask you if you found some value in what we're talking about so far. Do us a favor. This show only grows if you share it with another investor. So please consider doing that. If you're watching us on LinkedIn or on YouTube, give us a quick like and subscribe. So, Alec, I put you on the spot here. Where do you think the current trend is? Like everybody's probably telling us to do one thing, but Alec is about to tell us to do something else. What is that something else?
I'm about to do that. Everybody's saying to do flex space. I actually will say don't do that. I see a lot, and when I say that, the flex space that worked like in the last 3 to 5 years was build out an industrial park and build 30 to 100,000 feet of those small bay metal buildings and don't dress them up. Maybe you don't really need windows and they're kind of far out. I think that product is going to be overbuilt in a lot of markets. You might be able to find some markets where that's not overbuilt, but a lot of markets that I've looked at, that's starting to be overbuilt, and that's something I would not touch anymore. What I would do is I would do like a niche. I would do like a more niche flex product. The flex space I'm building now is called retail flex. So it's essentially a flex building. You dress it up nicer. You have really nice windows, maybe a nice facade, make it very presentable. And you'll have that on like a major road where a retail building should go. And I like to find sites that should be a retail site, but it might not have enough sewer. A retail building needs a lot of sewer. A flex building doesn't need as much sewer. You can do septic for flex space. And you get a lot higher rents for being on a major road. And sometimes you only need more than 10,000 cars going by. And you'll get higher rents. You'll get like $2, $3 a foot more. Another flex niche product that I like is flex space and outdoor storage. So if you do maybe like a flex building and 1 acre of outside storage, nobody's building that product. And that product does very well. The profit margin on it is better than flex space, in my opinion, and will lease out a lot quicker. So you don't quite maximize the site, you're fully protected by leasing that out quick and making sure that you aren't building in a bubble.
Yeah, I was going to ask you about that. Some outdoor additional storage probably would be a pretty significant draw for some businesses.
Yeah. Yep. If you combine both, like retail flex space and outdoor storage, if you combine all of that, I think that's like the golden goose product that I'm really excited about. If you can get on a major road and do flex space and outdoor storage, you have endless companies that will need that, like a Bobcat rental, like a scissor lift rental. Anybody selling equipment or trailers, like a granite tenant would love that. There's so many people who would need that product and who would want that product. So
Oh. We've talked about the actual building and like outdoor storage and a few other things, but are there any other amenities that would surprise people that you found to attract these residents or tenants?
yeah, a little trick is, and it's so funny in Texas, like you go to a lot of these flex buildings and there's no AC in the warehouses. And sometimes it gets to 100, 110 degrees and the workers there are just like sweating all day. And I don't know how they do it. I guarantee you they're gonna love working in an AC building way more than one without AC. So if you put AC in the warehouse, I'm seeing that you can maybe get like $1, $2, sometimes $3 a foot more in rents because nobody else is doing it. And if you're able to find HVAC for a pretty good price, you can make a great margin off of that. It's also a product that
Yeah.
nobody else is building.
Why do you, is it simply the cost? Like people don't put AC in these? Like that's be the first thing, one of the first things on my mind is, but then I suppose when you have large doors, as soon as you open the door, the AC is like spent.
Yeah, and the tenant does pay for the electric bill. It's generally a triple net lease. I see a lot of developers right now, they're putting AC in the office part. So let's say your flex building has like 10% office, 90% warehouse. They'll have AC, they'll have a small mini split in the warehouse piece. And their theory is like that should be good enough. They can go cool down there. Some tenants just don't need it. They just need flex space to store their stuff. You have to upgrade your electrical capacity too. So it's a little bit more complicated trying to figure out the logistics of it because when you put up these flex buildings and like some tenants need it, some don't, you need to have a more flexible solution for that, like a building with an upgraded electrical capacity to support HVAC if they do need it. So it's just a little bit more thought that goes into it, I guess.
Well, I could definitely see where there would be a draw. Most people are going to have a space where they can do maintenance on their equipment, prep for the
Yeah.
day. They're not going to want to be standing in a building, usually a metal building that's just talking about the most. I can imagine they're just going to heat up like a bread box.
It gets really hot in those, extremely hot. I don't know how they do it. But yeah,
Mm.
I think people are more and more wanting AC. So I just see that trend. I mean, just apply it to your own life. Like turn off the AC on a summer day just for one night and see how much you like it.
Right.
So
Yeah. Before we jump into the rapid fire and close out this episode, is there anything else we should have tried to hit on here?
for anybody looking to get into development or value add or just trying to figure out what they want to do, just pick something and get really good at it and find your niche. Like Jack, it sounds like focuses a lot on wholesaling and does it really, really well. And is probably the best in his market at it. And that's how you have a successful company. If you want to make $1 million plus a year, that's what you need to do. Are there some opportunities that might be a 5 million a year company versus like a 1 million a year company? For sure. But I'd figure out what you like. What do you want to make a year, or what do you want your net worth to be? What type of lifestyle you want? Be really honest with yourself. And then there's a handful of real estate or blue collar companies that can probably get you there and get you there pretty quick. And just pick one of those and niche it down and be the best in your market. That is, in my opinion, the best and quickest way to do it.
Yeah, we hear there's riches in the niches all the time, but I don't think people actually adhere to it.
Yeah, I don't think they know what that means. Like they say it, but they don't know what it actually means. And this is what it means. Pick something and niche it down even more and just stick to that. And when somebody tells you they found the 10 million a year opportunity, say, great, I'm going to stick to my $2 million a year opportunity and just get really good at it.
Right. Well, Alec, this has been a fantastic conversation. I don't want to direct everybody again. It's land-play.com. I'm going to have that as a clickable link in the show notes. But if you're ready, we'll jump into the rapid fire and close out this episode.
Let's do it.
What lie do real estate investors often tell themselves?
That's a great question. I think a more helpful frame is be more humble and assume that you don't exactly know what's going on. And it's okay to second guess yourself and get advice and coaching.
Sure. If you could go back in time and give your younger self a piece of advice, what would it be?
I would have told myself to pick a niche. I was all over the place. I couldn't figure out what I want to do. Do I want to flip? Do I want to do construction? Do I want to do this? Commercial, residential, multifamily? Just pick something.
Do you have a book recommendation?
Think and Grow Rich is my favorite book. I think mindset's one of those tricky things because some people don't really like it because of all the negative influence that's come from that. But if you want to build the confidence and the capacity to take on risk and do bigger things with your life, you do need to adjust some things in your mental programming. And mindset's a great way to focus on that. And Think and Grow Rich is an example of one of those books that is really helpful.
And finally, what single process or tool have you implemented that has had the biggest time saving impact?
Do things immediately. Whenever an issue pops up, do it immediately.
This is something that I've been forcing myself to do now for the past few years, and I can't stress that enough. Looking back, how often I just kind of hold things off or procrastinate because I didn't want to do it. The cycles and energy you use to procrastinate is, in the end, it would be way faster to just get it off your plate and be done with it.
Yeah, that statement that you just said is probably the most important statement I think every American needs to understand. If you're listening to this podcast and you're not investing right now, you're procrastinating straight up. And
Yeah.
that's probably, if there's any advice that you take away from that, like what Jack just said, that is the most important advice.
Yeah, and I hate to dwell on this, but even when we go to the mailbox and grab something and then set it on the table by the door and then having to touch, I only want to touch it once. I've already grabbed it out of the mailbox. I've got it sorted and thrown away by the time I get to the house.
Yeah, you think I'm just like just doing it now, just not procrastinating, do it now.
Well, Alec, I really appreciate your time. One last time, it is land-play.com. Definitely check that out and see how you can get involved there. I hope you'll come back again sometime.
Thank you.